Good afternoon, everyone. My name is Lucy Amagon, and this is a pre-recorded video intended for my Business 206 Financial Markets and Institution Section 23 class. Today, I'll be presenting on Coca-Cola and whether I think it's a worthy stock to be purchasing or not. Let's find out. Before I begin, I would like to tell you some fun facts about Coca-Cola that is associated with their background. Did you know in the year 1886, the very first ever Coca-Cola was sold in downtown Atlanta, Georgia, in a pharmacy called Jacobs? They were actually able to sell 9 bottles every day for the first year. Pretty cool, right? Later on, in 1963, Coca-Cola created the very first diet beverage. Needless to say, it was pretty successful, taking into account that 50 years later from its production, it's still a big hit today. In the recent years, in 2009, the beverage company decided to create a new type of packaging, and their new type of packaging was called plant bottle packaging, which allowed the technology to have 30% materials made from plants, and it was designed to be recyclable, which was the first of its kind. Let's continue. Before I go any further with my presentation, I'd like to give you a mini lesson so you can understand my decision later on within the presentation. The following are just definitions and explanations. The very first one is market cap. This is an item that measures the size of a company. So how do we measure the size of the company? Great question. We get the numbers of outstanding shares and multiply by the stock price. Now that leads to the next question. What is considered a small, medium, or large size company, right? Well, typically, a small company will be within 3 to 5 billion market cap, while medium is roughly 5 to 8 billion market cap, and finally, a large company is anything above 10 billion market cap value. The next item is beta. This item measures the amount of volatility. In other words, how does this stock respond to the change stock price in the overall market and the systemic risk? Anything above 1 indicates that it's very volatile and riskier. Meanwhile, anything below 1 is less volatile and less risky. The following item is PE ratio. This item measures the stock value. To get the PE ratio, you must get the stock price and divide it by the earnings. This item can determine whether the stock is under or overvalued while the company is being compared to other stocks within the same industry. The final term is forward dividend and yield. This item measures the annual dividend, which can determine the yield. To get the yield, you must get the stock price and divide it by the annual dividend, which will represent the yield. Now we are ready to move on forward with the presentation. As you see here, I'm going to begin. Wait, let me get my laser so we can all follow along. The stock price for Coca-Cola as of yesterday was $52.57. The here in green indicates the price change, which means that Coca-Cola has went up $3.12 or it went up 6.31%. Now let's move forward. The previous closed stock was $49.45. The open price was $52.50. And the reason why these two are different is because there are after hours trading and before opening trading, which causes the opening price to always change. The bid price is what the buyers are asking to buy for the stock, and the ask price is what the sellers are willing to sell the stock. However, they will come into agreement, which indicates the stock price. Today's range is $52.07, which means this is the lowest stock price of yesterday's date, and the highest was $53.26. Meanwhile, the 52-week range, this just indicates the lowest stock price and the highest stock price for Coca-Cola within the last year. So this indicates to us that $36.27 was the lowest. Meanwhile, the highest was $60.13. Now let's move forward to market cap. As we see here, Coca-Cola is above beyond the average large company because it has 225.91 billion as their market cap. Meanwhile, their beta is 0.555, which indicates to me it's less volatile and less risky. And the PE ratio is $27.24. And this is undervalued because in the most recent S&P 500 E&P ratio market price, it is between $30 and $35. Now, let's go to the earnings date. This just indicates when will they release their financial reports. So that will be next year, late January, early February. The forward yield, the forward dividend and yield is $1.64 as a dividend, and the yield is represented in percentage form is 3.32%. And the ex-dividend date, this means if you would like to be a part of the next dividend payment, you must buy the stock price before this date. However, if you buy the stock of Coca-Cola on the 30th of November or after, you will not receive the next dividend date. And then the 1 year target estimate is an estimate of what the stock of Coca-Cola will be within 1 year from now. And it indicates it will be $56.40. Now let's move forward. So, big question now. Should we buy Coca-Cola stocks? Well, let's find out. It depends, honestly. A mini lesson number 2. There are 2 types of stocks. There are value stocks and growth stocks. The difference between the two is value stock has a lower stock price compared to growth stocks. The PE ratio will be much higher for the growth stock. Typically, value stocks have higher dividends and yields. Meanwhile, growth stocks have low to no yield. And the reason of that being is because they reinvest their money into the company for it to grow, thus, hensing growth value stock. The way I like to think about it is let's compare it to college students. Right now, college students are considered to be growth stocks because we are investing our time and money into our secondary education for the long run. We need to have time to grow. Meanwhile, as a professor, can be viewed as a value stock because their investments have already paid off in terms of their education and career path, and it shows with all their achievements while being compared to students while they're still growing. Now, knowing this piece of information, what is my answer? Personally, me, yes, I think I would definitely buy Coca-Cola stock just because the company has been in the beverage industry since 1986. The company gives out dividends, which tells me this is a wonderful opportunity to cash in recurring income. Not to mention that their stock price is undervalued and their beta is low. Preferably for me, I have a low risk tolerance, so this stock will be perfect for me because I'll feel comfortable in buying it. This is the end of my presentation. If you have any further questions or concerns, please feel free to ask now and pause the video. Thank you for listening for my presentation today. I hope you enjoyed it. Thank you.